have the current market analysis for Finger Motion Incorporated, stock ticker FNGR. The current price history that we're looking at here is the daily chart. So each trading bar here will represent a 1 hour, 1 day, 1 full day trading period. So each candle represents a 1 day trading period. So if we kind of zoom in here a bit, mostly what we can see here would be considered to be a descending triangle pattern. For the most part, this would be considered to be a bearish pattern. However, there are scenarios that could unfold, which would allow this price pattern to break in certain ways and allow the stock to start to rally much higher, even though this is a bearish pattern. And from what I'm seeing in this chart, this does look like we could currently be on the verge of this type of move. So in this video, I will be explaining why I think that's the case and which price levels are most important in determining new trading strategies here going forward. I understand that a lot of people that are trading this stock are currently underwater, which means their positions are losing money. But there is some reason to sort of be optimistic here if we see certain developments unfold here in near term. So I'll be explaining those next. So in particular, if we kind of look at this chart here, what we can see is a descending triangle pattern, downward trend in the sequence of highs that have unfolded here. And then at the same time, we've got sort of a flat base, a support zone on the bottom to the downside, which has managed to contain prices. So, most of the time when you see these types of patterns, they do tend to break to the downside because they are bearish patterns and we are seeing a series of lower highs. But we're starting to see some factors unfold here, which do start to point in the other direction. So in particular, what I would point to would be this first low here, which occurred during the March 20 trading session. During this trading period, we did see lows of $1.92, $1.92, and then we did see a bit of a rally here, so that share prices were actually able to retest the downtrend that's present in this descending triangle pattern. As this occurred, we ran into a bit of a double top resistance zone. We can sort of point that out here. This would be one top, and this would be the other top. And as we can see here, prices did start to fail here once again. But what is most encouraging about these events here is that the share price itself has actually managed to roughly maintain the same support level, which would have occurred during the March 20 trading session. There were some very strong negative bars here, as we can see. But this selling pressure, even though it was forceful, was not forceful enough to break through these support levels on a convincing basis. So given the fact that we're starting to now see bounces here, we can stop roughly focusing on the base part of this triangle and instead focus on the descending trend line instead. Because what we can see here is that this descending triangle, this descending trend line here, is ready to start coming under pressure fairly soon. If we did not see a significant break here to the downside, and as long as this current price support zone holds, the next path of breakage, so to speak, would be this downtrend line. So if this were to occur, this would largely invalidate the descending triangle pattern, and it would allow prices to start to gain some momentum to the top side. This is true even though we are seeing a descending momentum condition in the relative strength index. This would be the purple line at the bottom of the chart here. But what we have to note here mostly is the fact that prices have reached oversold territory and then started to bounce out of oversold territory. So overall, this is a bullish event because it suggested that prices had traveled too far in the downside direction, and that this did occur during a major support zone that was seen previously. So when we combine all these events together, at the very least, what this tells us is that the relative strength index can continue to move to at least the 70 mark before we start to become overbought. Currently, we're trading at roughly 40. So in a relative strength index reading, that's not very high. It's below the midpoint. So this does tell us that there's a far amount of room that we can extend to the top side without becoming overbought. Conversely, to the downside, we can't travel very far without becoming oversold again. So as long as these major support zones hold here, we really have to start to look for and expect a break of this downtrend line that really defines this descending triangle. If this does occur, the next major levels of resistance would be seen with these 4 exponential moving averages. That would be these 4 colorful lines here. And since this is a daily chart, these are important exponential moving averages. So we'll take a look at these and explain them quickly here. The yellow line is the 20-day exponential moving average. The orange line is the 50-day exponential moving average. The purple line is the 100-day exponential moving average. And then the blue line here would be the 200-day exponential moving average. So what would be most likely to occur next, as long as these indicator readings do sort of maintain themselves, and we don't see any significant surprises here or significant moves to the downside, what we would expect first would be a break in this descending triangle downtrend line. If this does occur, then we can start to expect to see successive breaks in these exponential moving averages, and then once this occurs, there really isn't much resistance overhead other than this historical resistance zone, which did come in at roughly 392. So all of these events here would be expected to sort of help the stock gain in momentum and force the price action through this double top zone. And then once this occurs, we would expect to see a fair amount of price momentum underlying the stock going forward. Overall, this would be a bullish scenario here. The outlook would change if we did see a break below this support zone, which comes in at roughly $1.90. If that did occur, we would need to revisit the analysis here and come back and look at the chart once again. But until this occurs, the balance of the evidence is still suggesting that an upside break here remains possible. So here's the current market analysis for Finger Motion Incorporated, stock ticker FNGR. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.